if you focus on a certain industry and space and you go deep, you'll figure out, look, this is connected to this is connected to that. So in fintech, you have the API guy, you have the neobank guy, you've got someone in insurance, you've got so many. You'll just find in fintech the tentacles. So I'd say if you really want alpha in sourcing, spend time in a specific sector that irrespective of whether it's hot or not, you like it, you spend time. Go speak to people where there's no live deal, right? And build relationships with people. Nothing will come in the first 2 years. So a lot of what I think I'm reaping is just a function of time, right? So I'm not the smartest guy in the room. Like, it's just pretty much, I'd say 80% are just more intelligent than me in this business. But if the flow is, there's two ways, right? If I'm able to source in a smarter way than somebody, then I figured that out. And at the same time, the opportunities are coming to me because of other people who've had a good experience of working with me, right? And in that, maybe you'll find something very interesting.
This is Siddharth Aluwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as Mygate, Neo, and Reco. To know more about Prime, visit primevp.in.
Today, I have with me Arun Venkatachalam. Arun is a very well-known angel investor with 25 plus investments, which include ZWork, recently raised 200 million, Industry Buying, ZestMoney, Jupiter Money, City Mall. Arun has also 6 successful exits to his name, which include Yourbus acquired by Naspers, Innov8 CoWorking acquired by OYO Rooms, Carmeasy acquired in secondary sales. Arun, welcome to the podcast.
Hi, Siddharth. Thanks for having me. Very nice of you to invite me.
Arun, I'm intrigued. What do you do for a living?
I'll just track back a little bit. So basically, I'm born and brought up in Chennai. And I've actually not been there for I've only been in Chennai for 2 of the last 12, 13 years. I mostly studied in England and worked in Bombay and London for the most part. So unlike many others, my route to getting into early stage technology investing was actually a different one from other people. So basically, my family runs a bunch of old school businesses, not really tech heavy, based out of Chennai. The group is called the Murugappa Group. We've got interest in agriculture, financial services, and manufacturing. The group has 9 listed companies. They're all professionally managed. And because it's professionally managed, as family members, we're told that, there's no, it's always fine and nice to go work with the family. But the first 3 years, you got to go work for somebody else, right? And I always had an interest in financial services. And those days, investment banking was the cool thing to do, right? So I decided to do that. So as a result, I did it, and I worked for Inam Securities in Bombay, which became Access Capital. Then I worked for Lazard. I eventually went post MBA at London Business School. I worked for an asset management firm called Habrock Capital. But in that whole process, I realized that, look, most of the publicly listed universe in India is just family businesses, much like my own. But in 2010, 1 out of 10 companies was not family promoted. And I had a theory that by 2030, it would reverse. Only 1 out of 10 IPOs will actually be family business IPOs. The rest would be, VC and PE backed. So I said that, okay, that was the case. And then, India tech was just sort of taking off. And those days, I went to, Manish Rokani, who used to run Inam Securities. And I said, hey, look, we have this TMT business. And on this technology side, all the time, you guys are only talking about IT services. What about product? What about actual businesses that are selling in India to Indians and Indian companies selling product abroad? And most of the tech guys were just doing IT services stuff. And I found this rather bizarre. So he was kind enough to say, hey, why don't you just represent the firm in some of these VC circle events and stuff? This is 2011. And at that time, only like from 40 people will attend these events. It was too nascent and early. So I got an early opportunity to kind of start. And those days, we were probably less than like 30 to 40 angel investors in the whole country. So I said, okay, it looks like, a nascent industry. Very few people are willing to put capital in. Maybe I should start. So I said I would do it, but my capital really came from investing in public stock markets. I happened to be lucky enough to invest in a company called Bajaj Auto Finance in 2009, which became Bajaj Finance. It could have been the greatest investment of all time, but it went up. It just constantly kept going up. I sold it 33 times, and every time I sold it, it went up some more. But look, it helped finance some of my business school, and it also gave me the capital to first go and invest in early stage technology businesses. Because at 22, obviously, though there is some family money and surplus to put towards to this, we're at the end of the day, we're just conservative South Indian people from Chennai. So I was not going to just go get the opportunity to go crazy. So as a result, I said, okay, fine, I'm going to risk it. I might as well just risk whatever I've made myself, and then I'll start. And before I move on and we discuss everything, I have to, give credit to the first guy I invested in, and that's Ashish Tulsian of Posist. And Ashish is now a bit of a dawn in the whole Indian ecosystem. But those days, Ashish was a nobody. I was a nobody, but we were all just excited about what was going to happen. So I told Ashish, the most fortuitous thing of that investment was that the first person I invested in was Ashish, and that was actually just a really good experience, right? Had it not worked and it had been a sour experience with somebody else, I may have just stopped early stage, right? So for me, the first foot in the door was a very important one, and then I just kept building, and 8 years on, I've done a bunch of stuff since then.
And what were your other, let's say, the top 10 investments, or the first 10 investments, I would say?
I don't know, I have to think, but basically, early on, it was Posist. Then it was Yourbus, which basically got acquired by Ibibo. But these were companies from the Morpheus incubator, right? And I knew that Samir and the Morpheus would have done a bit of DD on their own. So I didn't have to do all of it myself. So it was quite okay to start there, right? Because nobody knew too much what was happening at that point. Then eventually a few others came. ZoomCar, got to meet Greg and found out what he was doing. Industry buying. So my family comes from a B2B business background. And those days, everyone was just excited about B2C, food delivery, and a whole bunch of these things. And I'm like, okay, B2B is interesting, but somehow no one wants to talk about it. So we got to meet Swati and Rahul at Industry Buying. And then, that was a, joining of hands. And from there, I said, okay, B2B is going to be much more deeper and more interesting. And I'll start, and I just kept building on from there. And in the beginning, I tried to do everything. But over a period of time, I said, okay, look, one needs to have a circle of competence. So I just tend to focus on a few, but for learning, sometimes it's okay to allocate a little bit of capital into exciting new areas. So obviously, I may not be an expert, but I will ask if I can be a part of it. And that's just the whole part of it, right? So maybe I'll be an expert in 15 years. I don't know. But someone has to start somewhere. So yeah, B2B, Fintech, marketplace is really where I think I do understand something. SaaS, I'd like to do more because I have, the opportunity to consult with people like Ashish of Posist, Ankit Oberoi of AdPushup. All these guys, are great resources, so I can go do more. And then I realized because I can't do everything myself, in consumer brands, I won't do it on my own. It's just too hard. You have to just do that one sector all day, every day. So I normally was not an LP. I used to do things direct, but for consumer brands, I said, okay, I will be an LP in Sauce VC, Manu's fund. And, wherever there's opportunity, I'll co-invest with it.
And, you have some fantastic names in your portfolio, starting with Posist itself. So a backstory, Ashish was an investor in my company called Baby which got exited to Shiros. I also come from the same Morpheus gang. I was in the last batch of the Morpheus gang.
Yeah.
So dot connects backward.
Yeah.
And I have Ashish are a co-investor in several SaaS companies. Uh, uh, what has been your largest exit till now, Arun?
So, I wouldn't want to honestly put numbers. It's just not right. And
Yeah.
the effort here is to just, you know, find great entrepreneurs who create value and jobs in this country. So, I won't really put a number to it. It's been healthy. Uh, I've pretty much I've got out almost all the capital I've put in so far, right?
So which company is your largest exit till now? Which portfolio company?
Well,
Not
it's not,
asking numbers. Not asking numbers.
no, no, okay, okay, okay. So I'll put it this way, right? If I put X across 23 or 24 odd companies, I've kind of exited 5 to 6 fully. No, I've exited 4 to 5 fully, and I think there's some part exits. But the one that's sort of healthy, I'd say a healthy exit was Zetwork. It would have been nice to carry on and, keep riding that because it's a beast.
Yeah.
But, the truth is, when a founder like Srinath of Zetwork, having delivered so much return to you in such a short period of time, comes and requests you, could you sell some in? It was a very, it was already past my, long-term capital gains period. And, it wasn't really, it was okay. But, if someone's returned you such a return in such a short period of time, it's a give and take. And because it was a request from somebody who's just done so much, I said, okay, chalo, please allow me to continue. But if you need me to, respectfully, I don't mind doing. So, it was just a very decent conversation. And I was happy that I could do something for him a little bit. And, just, I just cherish the good fortune of having, being given the opportunity to invest in him. So yeah, it's been healthy, but, I just wish that, I could have run with the rest, but whatever I do have remaining, I really do want to run with it right till the end, because, Zetwork is a truly special company. And yeah, just been, my good fortune, I suppose.
Let me ask, have your 6 or 5 exits returned the entire capital which you have allocated till now in startups?
Yeah, pretty much. Yeah, for the
Awesome.
most part. Yeah. If I net off what I just did in the last 6 months, yeah,
That's great to know.
adjusted for that.
You have been in this ecosystem, let's say, for the longest period of time, 8 to 9 years, I would say now, right? And you have been investing consistently. So for you, it's average about 2 investments a year. How would you say?
So, if it's not a function of average, it's a bunch of things, right? So I'm not investing other people's capital. I'm just investing
Yeah.
mine and my father's and mother's capital. As I said, we're quite frugal people from Chennai.
Yeah.
So, we after a point, there's only so much you can genuinely invest,
Yeah.
spend on yourself. And if there's more surplus, I'm not going to spend it on myself. I genuinely get more happiness, putting that money to work in a great entrepreneur who can create jobs and create a virtuous cycle. So me spending it on some lavish holiday beyond a point really doesn't do any difference to my life. So yeah, I'd say that what I have changed, Siddharth, is today this ecosystem is matured to a point where if you're too small on the cap table, things are starting to get a little hard, right? Are you going to get information? Some people want you out. Uh, how are you going to be more meaningful? So I feel like, having done 25 whatever odd investments, most of them have been reasonably okay. Some have been like stellar returns, some have been category defining companies. But what I have realized in the last 4 years in specific is that, I'm able to kind of figure out which ones have a really good chance of success, what kind of pattern recognition to look for in founders. And I'm like, if I can do that, and after in 8 years seems to be enough of time to kind of figure it out, maybe go big and deep into a few. So the way I look at it is like, now every year, try to go big and deep into one or two. And whenever there's something truly exciting, where you can just put a little bit, I'll do it. Right. So whenever there's something interesting in SaaS, right, where I know this business will compound slowly over 10 years, and the founder is very much like Ashish, where, you don't need to raise money, like, and so much just to make this model work, I'll do it. We can talk about it later, but I'm very excited about the low code space, right? And I'm going to do something over there, very nascent, but truly can be game changing. I feel like, because the arc is not yet built, everyone's kind of figuring this thing out. So I can learn and kind of try to be on top of it. And if this becomes something special, maybe it will be something I can go deep in eventually. But for now, yeah, to be meaningful on the cap table, and to be important to a founder, that I'm really putting my money where my mouth is. Do fewer but do deeper, and almost behave like a micro VC. This is just my changes as the industry does change, right? And yeah, it's got its pros and cons, but yeah, that's how I've kind of like shifted a bit.
And today, if we say which are the top 5 companies in your portfolio which you are most excited about? Like Posist is definitely one of them, because we have heard his name multiple times in our conversation.
So the beauty of Posist is, I've invested, me and my cousin Muthu invested in 2013 and 14. No, 12 and 13 or something like that, right? Since 2014, he's not diluted me even once, right? And he's built this entire business just on his own cash flows, right? And I think people don't realize the value of this over time. So today, Posist stands on its own feet and it generates enough surplus for itself. And there'll be a point where, this thing is going to be so important in the larger scheme of things, the value will accrue. So I told Ashish, look, if you want to be, if the exit event or something happens only in 2025, I don't really care. See, because I don't owe some of my capital to anybody else, right? And if you see, most of the Murugappa Group companies have compounded slowly over 50, 60 years, right? And we've never taken money out of these companies. In fact, we just constantly reinvest in our own businesses. So, I've grown up around the mentality that it's very good to wait over a period of time when you are very comfortable with the founder. So I think Ashish will be a very special outcome, but he's very quiet about it. So in 2025, when I think it'll be something, he will. A lot of people will be surprised how valuable this company might be, right? What I would say is, just to know how interesting Postis could be, take a look at a company in the US called Lightspeed POS. It's listed in the Nasdaq, right? And it's listed for what, 9 billion or something. But it started off as a restaurant POS system. So, if Postis is doing a lot of work, even in developed markets, and taking them head on in some contracts in Cloud Kitchen, a lot of special things will happen. So I think Postis is great. It's very quiet. Another incredibly quiet business, which is just, it's a beast, is AdPushup. And AdPushup was rated the 154th fastest growing company in the US, right? And this guy also doesn't raise any money. He just grows. So these two guys, there's something very special that, the fact that they don't dilute and I'll get something, I don't mind waiting even 10 years, because it just gives me so much joy that these guys are doing all this without having to be at the mercy of some investor the whole time. So these two are the quiet ones. The ones that I think will raise money and still be category defining will be obviously ZWork. And I think what's important with ZWork is, I grew up around manufacturing businesses. So when Srinath and Amrit initially started talking about it, I could resonate. And now everybody is just going gaga about this stuff. So in ZWork, I still think we're just at the cusp, right? People say, unicorn, decacorn, or whatever. If this thing goes to the moon, it's pretty much got all the trappings of a success story, because it's truly, once in a decade Indian company that can go global, So that I think is great. Then there's a company that we've not spoken about called Medica Bazaar. And I'll tell you, the learning there, Siddharth, was I did an investment in B2C food delivery. And at the time when I did it, I kind of realized, I didn't realize, there were 40 something guys trying to do this at the same time. And how on earth are you going to pick the winner? Right? It was just impossible. So then when the same thing happened a few years later on B2C pharmacy, pharmaceutical delivery, I was like, the same thing is going to happen again. There's absolutely no way of figuring out which one of these guys are going to survive. And if you just do the math, basically Reliance picked up one, and the number one guy picked up the number three guy. So it's pretty much a 2-horse game left, right? So I said, at that time, what was the point to go into this whole B2C thing and then burn my finger again? So then I was like, okay, let's go to B2B pharmaceutical, not pharmaceutical, but healthcare. And I used to do a lot of investment banking work in India in healthcare, right? I almost worked on a deal, but it didn't go through. And being focused on public equity, I knew what was happening in this industry. Like 24%, 25% of all net revenue was basically consumables. So I was like, okay, how many people are doing B2B in healthcare distribution? And it turns out there was just like 3 or 4. So I could actually do diligence on 3 to 4, and I found the best guy. And a lot of my returns now are skewed to taking a disproportionate bet on Medica Bazaar, right? Where maybe it's a good thing or a bad thing, I don't know, but I'm sitting on that cap table like a VC. So I think when you find that opportunity to just hit it big, you just have to go, because these small checks really will not skew your returns so much. So in Medica, I don't want to reveal any numbers. The founders said it on public forums, but it's a leader in B2B medical supplies distribution by far, right? So Medica, Zetwork would be on the B2B side, and then the 2 fintech companies that are super interesting. So I've had the good fortune of being a founding investor at the founding stage in ZestMoney, right? And ZestMoney pioneered buy now, pay later in India. And, I got to meet Lizzie and Priya. And, so my family actually has a, background in lending. So NBFC, which is Cholamandalam Finance, has been around for 40 years. And we've kind of conservatively built that business. But in 2008, we got into sort of unsecured personal loans. And, the company really, really went through a tough time, right? The share price collapsed. We had to infuse more money. We had a JV partner that had to go. And then since then, the market cap was about, it fell down to about 200 crores. And then over a period of like 12 years or 13 years today Chola's probably the 3rd most valuable or 4th most valuable NBFC in the country. It's got a market cap of about 42,000 crores. And it's a leader in its space of vehicle finance and home equity. But when you're disciplined in what you want to do, it really compounds very well over time. And the beauty of why I got interested in Zest, actually, there were so many people doing lending, but it's very easy to scale an unsecured personal loan book. I think I've seen it with my family. The problem with that is, it's not really a lending business. It's actually a collections business, right? So Lizzie and Priya they used to work for a lending company in the UK called Wonga. And Wonga really just grew that lending book so much. In the end, Wonga just, for a plethora of reasons, really didn't succeed, right? So when Lizzie and Priya were trying to build this for the second time, they came with the scars of how you build an unsecured book so quickly. So that alone was worth so much more than so many other founders. They've never seen a blow up. So I think ZestMoney is, an incredibly interesting business. If you just look at Affirm, Klarna, and Afterpay, there's so much to go in buy now, pay later, because millennials are shunning credit cards and digital credit through buy now, pay later. It's really a societal shift. You may question that whether it will work in India or not, but there's enough room in credit, right? In India, the issue is not demand, it's really supply of credit. So that's there. At the same time, we had the opportunity in 2019 to my uncle and I got to invest in a payments business called Cash Free. And Cash Free is as I like to say, just like AdPushup, another beast. Very few times do you see companies growing at the rate they do with such a high profitability margin, right? And that company is kind of building the back end APIs for the whole UPI system, right? And insane product innovation on instant refund settlements, bulk payouts, and all that. So yeah, so it's been good. There's so many other guys that are doing something special. If I were to just take three names of founders who are doing some incredible stuff, but a little bit under the radar. So now I think people may have heard a little bit about City Mall and what Angad is doing. I think he's got a very differentiated approach. People are talking with social commerce, but he was very quick to understand. Groceries is a segment where there's no returns. Everybody else was doing social commerce. There's like 20+% returns, and that it just wipes out your margin, right? So I think he's got a great model, and I wish him all the success. I went deeper into B2B marketplaces. So I took another deep bet into a circular economy startup called Recykal. And Recykal basically uses a marketplace to collect. So if you're say Dabur, Marico, and Hindustan Lever, you are obligated to take back your packaging waste because you put it into the market. But their core competence is not to do collection of waste. So this guy comes in the in the middle and basically helps them take it back, because if they don't and have a dossier, you actually have penalties from the government. Incredible business. I think it's going to be super exciting, because if you look at ESG, environment, social, and governance, this is like the perfect ESG business, right? So I told the founder, let's just build this slowly for 10 years. It's going to be a beast. I use the word beast too often. And then a third very interesting founder under the radar. I don't know whether it's going to work or not, but I just love their whole thought process. It's a multiplayer gaming business out of Bangalore called DevTouch. And I realized that in most countries you can make golf clash royale and so many other things, but true multiplayer in India really didn't work for a lot of people. So these guys, and I knew that the only guy who was going to make it work was a guy who makes multiplayer cricket. So this was like a very binary hero or zero kind of bet. And these founders have just really been at it. It's building a game is really more of an art than a science. They're artists, and I don't know whether it'll work or not, but it's another deep bet. But I truly believe that somebody will make multiplayer cricket work in this country. My only hope is it's the DevTouch team. So yeah, I mean, they're not in the news, but I'm equally passionate about some of these as than ones that you did mention.
Awesome. And right now you have mentioned that you want to take like very deep bets. But let's say somebody who starts angel investing right now in 2021. What advice do you have for him or her? For example, she has 1 CR, 1 crore rupees, and should she invest 5L in 20 companies, 10L in 10 companies, or 25L in 4 companies?
That's really a hard one, because the one thing you can't answer is how much risk appetite each person has. If you want a portfolio approach and you want to get a portfolio like return, then obviously you should just try to be an LP in somebody else's fund, right? Because your risk is spread and there are rules of how much you can invest in one company. So that's one. One thing I realized is, because I started in 2012 and because there's a track record, for whatever reason, founders seem to be okay, in talking to me and, wanting some access to my network. I guess they know that my capital is probably patient because I don't owe it to anybody else. As a result, most founders are okay to take my call and chat with me, right? So, but it's really a function of when I started, which was 2012. So today there are people who are getting excited because, it's all on this, on Mint, Ken, N-Tracker, all these NVC circles. People get excited by this stuff. So if you are new and you're entering this market, it's, it's almost likely that you will get a deck that probably a lot of angels who have the pick of the litter kind of passed on. So if you're new and you're getting a deck, I would say don't get too excited, because if a smart founder today has access to a lot of capital, right? A lot of angels who I work with, they also started very early along with me, or they're founders who kind of very prolific, and they want to share stuff with me, I share stuff with them. It's a very symbiotic relationship. But if you're new and you get a deck and you get excited, I'd say take a step back, because a lot of people probably would have seen that deck, right, and passed on it, and then it's kind of received, because had they been excited and they said yes, that round would have been closed very quickly, right? So what I would say is, figure out your risk appetite. If you want a portfolio like return, find a great manager, and just put money to work through them, right? Because paying that carry, it's only on success, which is perfectly fine. That's one. If you want to do, portfolio allocation of 5, 10, 10 across, I just don't see the merit too much in that left in the ecosystem today. But if you're an expert in a certain industry and you're convinced this is where the industry is going to go, and you found somebody who wants to reinvent that industry, go deep. No, I mean, that is your core competence. You probably have more knowledge about that industry than any VC investor. Most VC guys in India, I'd say, there are a lot of generalists in this space. I don't think there are too many specialists, as you may see in other parts of the world, especially in Israel or the US. So for the most part, when it comes to marketplace and fintech, I'm not saying I'm like the smartest guy in the world, but in those specific cases, and in some companies, the VCs do like to, they would like to spend time with me so that I can tell them what I've seen in this space. So if you're an expert in a certain space, right, don't presume that the generalist VC would technically know more than you. If you can come in before that person and you truly believe it, perhaps that's where you want to go deep. But with the one caveat, go deep with somebody that you know and trust, because at the end of the day, because of the mortality, relationships could sour, and if you don't want to sour relationships with somebody, don't do it.
So that's a very fine advice, Arun. Arun, how many of your companies have shut shop till now in the last 8 years?
So out of the 24, 2.
That's like a really good rate. So that means you spend a lot of time with the founder before making your call on investment.
Yeah, I think my worry is, like, if you end up with founders who be like, look, I have 4 months of runway, it works, or it doesn't work. Yeah, I tend to, like, it's just not for me. However, if you have a founder who's willing to zig and zag and find their footing and not be too hell-bent on only doing something in one way, right? It's more or less. So look, it's pattern recognition. I can't write it down or give you a formula, but I guess it does turn up somewhere. And I'd like to think a lot of the founders that I've ended up working with tend to have similar characteristics, of the fact that I'm obligated to make this a reasonable business, right? So my only request, I think, to a lot of founders is, the biggest thing I appreciate is if you can find a way to make it sustainable, right? If you make it sustainable, there's a passage in this book called The Psychology of Money by Morgan Housel, right? The true longevity of a business is how much of a runway you keep for yourself. And a lot of the founders that I've met, they always have about 9 months with them, right? So they sleep well at night. They can take long-term decisions. They're not doing short-term cuts, and that has turned up in the portfolio for whatever reason. And yeah, returns-wise, I'm happy. Maybe the conservative approach has given me a better than industry return, right? So yeah, I'm quite happy with it, and I don't have to be in super hot spaces where everybody and their cousin and grandmother wants to jump in, right? So for example, with the recycling company, it's not something that everybody wants, is excited about, but it will be something that someone's excited about eventually. But I have no qualms in being excited about something that people don't want to spend time on. Because for me, the opportunity is not running with the herd, it is almost always running against it. So for example, in Medica Bazaar, everybody went to the B2C pharmaceutical delivery guy. No one wanted to spend time on the B2B, medical supplies. So it was like amazing. I had time, I had choice, I had the ability to build a relationship with the founder. Um, so I'm perfectly okay with those guys, and who want to build a business a certain way. And yeah, I can't say I'm searching for it in specific, but it just happens subconsciously.
And Arun, how have the last 8 years you have been able to build your deal flow?
So um, so there's obviously everyone's got some secret sauce. So I'll never reveal the actual secret sauce of deal flow. But some of it is down to just focus. So I'll tell you the two ways which I think everybody else can really try to get some alpha in terms of sourcing. Find 2-3 spaces that you know that you can focus, spend time, and go and meet a lot of people. We're expecting nothing in return. I think what happens is a lot of people want to go and get into a business, go and get into an industry that's super hot, right? But you have to understand it gets super hot because everybody wants to get in it at that time. But if you go and meet people from an industry where you go meet a founder who doesn't want to raise money, right? If he or she doesn't want to raise money, that's a great time because you're just building a relationship and a network, right? Uh, if if I want, see, there are some cases where I wanted to invest in a startup and I just couldn't, but I still kept and I just thought that founder was just amazing, and I kept really good relationships with that founder. Now that founder also sends me stuff because we just everyone just kept it decent. So that founder sends me the deck of his company, right? Then another way is, if you have invested in some founders, genuinely just ask, right? Who's doing what? Who can I talk to, right? Um, and then, as I said, if you focus on a certain industry and space and you go deep, you'll figure out, look, this is connected to this is connected to that. So in fintech, you have the API guy, you have the neobank guy, you've got someone in insurance, you've got so many. You'll just find in fintech the tentacles. So I'd say if you really want alpha in sourcing, spend time in a specific sector that irrespective of whether it's hot or not, you like it, you spend time. Go speak to people where there's no live deal, right? And build relationships with people. Nothing will come in the first 2 years. So a lot of what I think I'm reaping is just a function of time, right? So I'm not the smartest guy in the room. Like, there's just pretty much, I'd say 80% are just more intelligent than me in this business. But if the flow is, there's two ways, right? If I'm able to source in a smarter way than somebody, then I figured that out. And at the same time, the opportunities are coming to me because of other people who've had a good experience of working with me, right? And in that, maybe you'll find something very interesting, right? But now the hit rates, I think here's the funny thing. Uh, in the beginning in 2012, your hit rate actually could have been pretty high because the number of companies was low. Then in 2014 and 15, the hit rate was pretty low. And now, because there's just so much ability, there's just 4G internet, and then there's the ability to build a global company out of India. So new markets open up. Suddenly the hit rates are starting to go high. But it's a function of that quality deal pool. So I'd say what brings down your ability to have a better hit rate is, I want to do edtech, I want to do B2B, I want to do SaaS, I want to do this. I think the realization has to be very simple that, you will lose a lot of good opportunities and deals, right? The key is don't lose good relationships and don't lose good contacts. And that's a great way to start. And in one kind of thumb rule that's patient is, don't expect to have a winner if you plan to do this consistently for the first 4 to 5 years, right? Because sometimes I don't know what's going to be a winner or what's not, right? So you have to give it some time to figure out. The winner will emerge, but you have to be focused, and you can't do this for like 9 months, go on holiday for 1.5 years and then come back. people need to know that you're serious about this for a huge period of time. And the reason I'm serious about it is because, you see, like my family is not going to promote any technology businesses. Our business model is to, brick and mortar. We will do, value added manufacturing. We will buy a competitor who is, on the ropes. We'll turn that business around, and we like to build businesses a certain way. I don't have exposure to technology through my family business. So for me, it's just a de-risking way to come out of some of that stuff, put it into technology. And for me, that's a long-term story. So I will do it for like 15 years. So for me, that's a unique way of looking at it. Everybody has a unique way, but don't expect instant returns. It's just not possible. It took me 8 years, as I said, to get most of what I put in out.
Fantastic. I think you have been a very patient man with your investments. One more last thing, before we conclude the podcast. You identified that fintech is your key core area, but you still like to do, let's say, consumer through Manu, or SaaS through the referrals you get from either Ankit or Ashish. So why didn't you choose to be only a fintech investor rather than spread yourself out in multiple directions?
So I think the point is, fintech is a word, but it's probably amongst the deepest spaces you can be in, right? So that's why I decided that it's okay to just say fintech B2B marketplace, right? Because I can do deep work in it, and I know genuinely how deep these industries actually are, right? So I have actually no qualms in saying I'll only do this. And also in fintech, I actually think that I have some edge in the market. And I'll tell you like this, right? Because for whatever reason, and because of the family business, I know very clearly how the lending business works. So Chola Finance. So today it has a 75,000 crore, 80,000 crore, something like that, book. Okay. Now, if I want to know how regulations work, if I want to know how certain, policy matters of RBI work, I can always go and ask for a resource in Chola, and I can understand how it works. If I want to know how stuff works on, the relationship between people who own the book and somebody who's doing fintech, who's trying to partner up, there's always people like Lizzie and Priya of ZestMoney. There's Akash of Cash Free. There's also, Ziploan is another company which I did, which is doing work. So what I'm trying to say is, we want, I have that depth to go in, and I know even within this space what I will do and what I won't do, right? So I'll just give you one kind of nuanced way. So today everybody wants to do invest in some NBFC. Large companies, even startup companies, want to build an NBFC. See, what people don't really understand is, even today the promoter holding of Cholamandalam Finance is about 47, 48%. The main reason is for 30 something years we didn't dilute a penny. So we kept growing out the book value just on our own profit. And eventually when the multiples came, we raised more money on book value as a multiple of book value. So we still own a good chunk of it. However, today, if you want to lend $1 billion, right, you're still constrained by what the RBI says, right? And what happens is, they will not let somebody new basically come and build $1 billion book with 7x leverage overnight. It just doesn't work, right? So what ends up happening, Siddharth, is people want to invest in NBFCs, but you don't realize that you'll be like 90% diluted by the time you build $1 billion book, because you will just be pretty much operating at 2 to 3x leverage. However, it's not that there's no opportunity there. So if you look at Ziploan, they do small ticket, unsecured, and sometimes unsecured working capital loans for small, so MSMEs, small traders, right? Now, why would I do that if Chola is also a big NBFC? That is because when Chola becomes such a big company, the cost base is so high to give a small ticket loan. And in a small ticket loan, the yields are so high enough to give a really good return on asset. So even if your leverage is 3, a return on asset of 6% pre-provision, levered up 3 times, is still a return on equity of 18%, right? Which is actually damn good as an NBFC business. The problem that happens is when you raise crazy money to an NBFC and you don't have some alpha, right, to do that, like in terms of cost or so many other things, to me, you're an NBFC. So the nuanced view is I'll do something that obviously Chola can't get into, right? And Ziploan wonderfully kind of came into that space, right? And Kshitij has done a fantastic job. Elevation and Matrix are both investors there. So what I would say is that I found a gap even in lending because I thought I wouldn't do, but there is opportunity. At the same time, I realized that, the real value for me is in non-dilutive fintech businesses. I actually want, if you look at most of the stuff I do, there's actually a huge fee income fintech exposure, right? And the return on equity on a fee income business is more aligned to a technology business, right? So if you are a tech NBFC, what does it mean, right? In India, because of the regulations, you're more financial than tech. So to me, regulation first. But if you're a fee income business, you're not regulated on leverage, right? It's really about how much volume you do. So that's why, a business like Cash Free is just truly unbelievable because nothing can stop it, right? There is no policy matter on how much it can grow and equity and stuff like that. So as a result, even in fintech, there will be opportunities in spread income businesses where I think there's alpha, but the focus is very clearly fee income, but it's so broad, right? I'm willing to be patient to wait for the right thing. If somebody else wants to, it's as simple as this. If you want to come and invest in a lending business as a technology business, your valuation is just some random technology valuation, which is fine, right? But if you build that business consistently, the penultimate investor before an IPO will value it like an NBFC only, right? They may give you 5 times book value, 6 times book value. It's all fine, but there is a cliff. You start with tech and slowly, your value starts looking like an NBFC, right? So there's a way to play it. And I think the way I've kind of approached it is just that, look, I have access and I have a nuanced view. So even in fintech, everyone wants to really focus a lot on the lending side. But I'm very clear that, I just love the fee income side of the business because, I think it's very underrated on how much you can actually build scale. People think you can build scale on lending and NBFC. I know how difficult that business is just because of Chola, right? So it's going to take a lot to convince me that you're going to be the king of a spread income business, right? But more people are likely to convince me that you'd be the king of a fee income side of a business. So that's a nuanced view, even in fintech, but it's a patient view.
And Arun, just a parting question. What does your daily schedule look like?
So that's actually quite interesting. So I was actually spending the last year just being an independent consultant, to fintech companies, and just investing, personal capital in the public market, which now looks great, but actually it's just a function of low interest rates in America, pumping money into India. Now what happened was, there was an opportunity. Recently, one of my sort of family companies acquired a business called CG Power, which is basically the industrial business of the erstwhile Crompton Greaves Limited. So this business makes switchgear, transformers, and electric motors, right? So, old B2B manufacturing business. But, there's a lot to do, right? So in electric vehicles, there's a requirement for electric motors. Electrification of everything is going to be somewhat interesting, microgrids, data centers, and so many things. So it's an open canvas, but it's just but we bought that business in distress, right? So I felt that, look, I'm not probably going to build a technology business on my own, right? But I seem to have enough exposure working with great founders on technology businesses. So I don't actually have to build it myself. But there was an opportunity to say that, hey, look, we run pretty reasonable publicly listed companies with a very clean balance sheet, right? And in India, everyone gets excited. Some people borrow a lot of money and then they don't repay it to the banks. And now through the IBC and NCLT, a lot of businesses are just going to be put up for sale, right? So there's an opportunity, at least within the family business, to look at a lot of incredible assets, old world, manufacturing. And just because tech is showing growth doesn't mean it's the only place there's growth. We can create a lot of growth, value, and profits just by buying, as my uncle, Mr. Velayan Subaya says, who basically used to run Chola and now runs Tube Investments and CG Power. There's a great opportunity in taking a third quartile asset to a first quartile asset in the old world. And generally, the Murugappa Group is a very professional business, right? So my whole effort to go and be a part of CG is not really to go and tell a product expert in motors or switchgear what to do. They are the experts. But sometimes, whether that's customers making some investments into future technology, making sure capital allocation is not going into stuff that doesn't return anything. These are kind of, core building blocks that I just wanted to learn. So it was a unique opportunity to help turn around an asset, which I think we've publicly stated that in 5 years, we want to take CG Power to about, 5,000 crores of revenue and 500 crores of PBT, right? It's a great business, incredible professionals. And I just thought it was unique to be a part of that. So it's a little, it's further away from technology, but, there's some convergence there somewhere. And, I've taken so much from the family business. I've been the beneficiary of my uncles and, my grandfather, everybody putting in their entire life into building this, great organization. I've actually not given anything back, right? So in the family, a lot of people kind of retire at, in the mid 60s, and they try to give an opportunity to the next generation to build some of these businesses. So I look at it as sort of my calling to give something back to, a business where I've only received. I've actually not given anything to. So it was more like a calling and a great, piece of timing, I would say.
And so you now spend like most of your working days in that business.
Yeah, but if any of the founders that I've kind of invested in message at like 11 o'clock in the night, or I have an idea at 2 o'clock in the morning, this is my, I'm just wired the way I am. So I'll always be on top of it. So yeah, I get a really good kick out of, giving my contribution back to, my family organization. But I'm like, look, I don't have to start necessarily. I don't necessarily have to start a business. As long as I partner with best in class founders, I get equal amount of joy just through their success.
Fantastic. Thank you so much, Arun. It's been a wonderful to have this conversation on the 100x Entrepreneur podcast. Grateful to you for sharing your experiences, insights. Kudos to you, for building such a great name in the Indian startup ecosystem.
Cheers, Siddharth. Ironically, this is actually the first time I've actually spoken about any of this stuff. As I said, like many people from Chennai, we're very quiet and under the radar. But it's always every now and then nice to share a story. So I'm glad you did call, and I hope to even one person who listened, this is somewhat useful. So yeah, thank you.